Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong rejection off of yesterday's lows and a test essentially of yesterday's high, where responsive sellers were active on first test, and the overnight session from that point on has been very balanced. Now, we know that the larger time frame bias continues to be bearish, but heading into the open, now we have to be much more careful and a bit more neutral because of the strong reversal that we've seen overnight. That part does not bode well for the sell side, at least in the short term. It doesn't mean that the larger time frame bias can't exert itself again later on today, but at least on the smaller time frames, which is really more relevant for day trading, we now have to be more careful on shorting this market and be very much in tune with the immediate momentum in the market. So keep a close eye on the NYSE tick. I think that's going to be a very good tell as to which side we should be focused on. So holding above the 1927 high volume node, we have pre-market resistance 33.5 to 36, and then the top of yesterday's range at 38.5 to 41, which marks initial resistance. So as long as we're holding below the 38.5 to 41, the initial resistance zone, technically the market is still within a short-term balance within yesterday's range, and there is still potential for the sell side to step in and push it lower. But again, given the strength we've seen in the overnight session and the buying that we've seen across the other markets, we do have to be more careful on the short side now. And now, the breakout above 38.5 to 41, in the event that we get a breakout, the market can go up and test 47, 49 quarter to 51 quarter, where sell side can still be active. And in the event of a strong reversal across all markets, there would be potential to go even up to 60 to 62 half. But we are going to need to see a lot of upside momentum in order for that move to take place, because that would be a complete, almost a complete reversal of the breakdown that we saw just yesterday. So right now, because of the way the markets are set up, because there is this conflict between the smaller time frames and the larger time frames, we have to be more careful because that's typically where there's a higher probability of chop, right? When you have this conflict between larger time frames and smaller time frames, you can get some short-term chop before the directional conviction really comes into the market and you actually figure out, okay, now this is where the market is headed, at least in the short term, and now there's a little bit more alignment across the various time frames involved. So for now, we do have to be a bit more cautious, even on the short side, but at the same time, it's not like the long side is easy here either. If you're buying at these higher prices near the initial resistance zone, then that's a risky play as well. So today is really going to be about exercising patience, being very much in tune with the immediate momentum, being very aware of the trade location that you're getting on any given trade, and having that willingness to let the trade go if there is not enough clarity in real time. So, if the market opens and it's just very choppy, then it's better to sit out and wait for some conviction in the market, some clarity before stepping in. You don't just want to start getting active in the market, especially as it's more or less chopping in a range. So today you are going to have to be a bit more careful than yesterday and the day before. Those were much more defined days, and they provided much better trade location, and the entire picture was much more clear. And that makes for better setups. But today we do have to be a bit more careful. On the downside, the first sign of seller stepping in would be a break below the 1927 high volume node, and then below that we have support at 18 to 20, which is very key, at least in the short term. Now, if we can break below 18 to 20, then there's potential that we could go directional. Definitely down to the 12 to 14 area, but possibly even all the way down to 1900 to 1903 for a retest of essentially yesterday's low. And then we have the overnight low at 07 quarter in between, but that's not really a major inflection point. So the 18 to 20 area is going to be quite important if sellers are really to step in and take over again on the smaller time frames, then we would have to see a break of the 27 high volume node and the 18 to 20 pre-market support. That would confirm sell side stepping in, and then as long as you're getting that downside momentum and you're seeing some liquidation type NYC tick readings, which should be at least around minus 900, maybe even down to minus 1100 or so, then you know that you're getting some panic selling in this market again, and perhaps then we can go down to the overnight low 12 to 14, and again 1900, 1903 is not out of the question if the sell side really steps in and we get a balanced breakdown from the overnight range. So until then, this is a market that's stuck in balance, and it can chop around within a range. It can even attempt a breakout, and if there's not sufficient momentum behind it, the breakout can fail and it can continue chopping. So just keep that scenario in mind, that right now we're in a very balanced state here, and until one side really steps in, on the upside above initial resistance, we'd have to see some strong upside momentum, indicating larger time frame buyers really stepping in the broader market, or a breakdown below 18 to 20, which should also be on strong downside momentum. Until we get that, there can be some continued range-bound activity. So, taking directional trades after the market has already moved 8 to 10 points is a very risky play. So that's the environment we're in, and we are going to have to trade accordingly, be a little bit more careful today because of the balanced state of the market and because of how choppy and range bound it is. So those are the main ideas heading into the open. Again, the larger time frame bias continues to be bearish, so we can technically continue balancing and then eventually still resolve to the downside. Typically the larger time frame bias does come into play eventually, but again, as day traders, we have to be very much in tune with the short-term bias as well. So those are the main ideas. Let's see, if one side can really step in and take over today, and we'll take it from there.